Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, August the 25th. Wanted to take just a brief moment just to discuss what happened in equity markets last week, what is happening in equity markets this week, and really want to spend time on where we see markets moving forward from here and the technical analysis that we're seeing in the internals of the equity markets. So last week bucked a trend of positive closing weeks with the S&P 500 finishing the week down 1.1%. The mid-cap index is measured by the S&P 400 was down a little worse, down 1.3%, and the S&P 600, which is the measure of small caps, down just a little worse at 1.4%. So pretty normal here that you would see some profit taking after such a significant rally off of the June lows that we saw, and we put in a bottom back in June and really rallied since then. And that's very normal behavior in the retracement that we've had from the bottom to where we are now. Expect some volatility here where we are at these current levels in equity markets. We've gotten a majority of the earnings in so far for corporate America. Those earnings were not as bad as feared, and that has really allowed the equity markets to rally here. You have the inflation month over month, June to July being flat. That was another reason for the rally. And now this week, markets started off the week. We ended the week, last Friday, on a down day over worries of the Fed overdoing it and sending us into a deep recession. Those fears continued Monday because this week, today and tomorrow, the Federal Reserve Bank is meeting in Jackson Hole, Wyoming, and tomorrow afternoon we will get comments from Fed Chair Jay Powell. So pretty significant down day on Monday, a 1% down day on Monday over fears of this. But we've rallied a little bit, and markets have finished up. The S&P has finished up Tuesday and Wednesday and is in good position today on Thursday to continue the march higher back to equal for the week, with all eyes really on the commentary tomorrow, and all eyes, the market is pricing in that the Fed is going to raise 50 basis points in September. But what they're going to be keen on is listening to Fed Chair Jay Powell and his outlook on where he sees rates and the increases going past September. And that's really going to be what drives the headline and what drives the markets on Friday. But what I wanted to do is just take a couple of minutes and just kind of peel back the onion real quick and see what we've seen in the equity markets and what our technical analysis is telling us. So at River Place, what we do from the technical side is we track money flows. I know you've heard me say that from time to time over the years, money flow positive, money flow negative, but what money flow does is it tracks a stock and it tracks it throughout the day, and if it closes above its arithmetic mean for the day, then it's considered to have positive money flow. So even on a down day, let's say the stock opened at $100 a share, dipped all the way down to $90 a share during the day, but closed at $96 for the day, that would be a stock that has positive money flow. And what money flow is doing is just following where money is going and the velocity in which it's coming into the equity markets and the conviction behind buying stocks. Well, what we have seen internally is that the money flows are incredibly strong and positive. And what you're seeing in equity markets is when you're having these sell-offs, the volume is nowhere near as significant as it has been in the past. You're seeing more buying than actually selling happening internally within the market. So people are actively buying these dips in the equity markets. And most stocks in the S&P 500 are trading now above their 200-day moving average. For those technical people out there, last week the S&P 500 ran right up to its 200-day moving average and has fallen since then. And expect that a couple of times for us to bump up against the very top of the 200-day moving average, as that being a ceiling on the equity markets for right now. Remember, we have made a significant move off the bottoms, so don't be surprised if you see us tread water here and we move from headline to headline over the next couple of weeks. All eyes pointing to the CPI report for August that we'll get in September, the jobs numbers, and what the Federal Reserve Bank does at the end of September when it comes to raising rates. So as always, if you have questions about what's going on with your individual portfolio or where you want to understand where markets are moving from here, feel free to give us a call. We're easy to talk to. We'd love to talk to you about it. You can reach us at 904 888-346-3460, or you can reach us out online at www.riverplacecapital.com. I hope everybody has a great rest of your week, and talk to you next week. Thanks.